Welcome to the Hurst Trading Room. This is our video update for the 6th of May 2013. Last week was an interesting week in the markets because the US markets went up to new highs, which was a really good thing for us because, of course, we have a long trade in the NASDAQ, and so that's proving to be a very profitable trade, and so that was good. Let's take a look first of all at our currently open positions. We have only 2 open positions out of the 4 instruments that we track in these videos. So let's take a look at those. Before we take a look at the market, please make sure that you have read and understood these disclaimers. So our first open position is an open position in the NASDAQ, which of course we've been speaking about for the last 2 weeks. It was an A category long trade, which was entered when price crossed up above the 20-day FLD over here, which it did towards the end of April. I think that was the 23rd of April. And of course the reason why we entered into a long category A trade at that time was because of the possibility that this trough over here on the 18th of April was a trough of 20-week magnitude, which of course with the benefit of hindsight we can say with some conviction it was, because price has bounced very strongly out of that 20-week cycle trough, and so our trade has been very successful in the NASDAQ. It took us a few bars to reach our T1 target. Our T1 target was over here, and as you can see, it took just under a week. In fact, we entered the trade on a Tuesday, and the following Monday our T1 target was hit. Usually our T1 target is hit any time between the bar of entry, the day of entry, and sometimes as much as a week, perhaps even 10 days later. Usually, of course, it's hit within the first few days. And so that T1 target was hit within 6 days. It was a slightly slow trade to develop, and our T2 target was hit later last week on Thursday. Here is our T2 target over there. So as the price rose up on Thursday of last week, our T2 target was reached, and of course we immediately raised our stop loss on our remaining trade 3 to a break-even level, and we started implementing the 3-bar trailing stop. So as you can see, I have a stop set for our remaining trade 3 at that level over there, at the level of the 3-bar trailing stop, and of course that level will keep on being adjusted as price action unfolds. And so this has been a very profitable trading opportunity for us. We've took profit at the T1 level, we took profit at the T2 level, and we have now locked in a profit. You can see that our remaining open trade is currently sitting at a profit of $700. So that's pretty good. And the worst that can happen now is that, of course, the market turns around and comes down to our stop loss level, at which point we will take a profit from our trade 3. Trade 3 is nicknamed the lottery trade because occasionally it brings in a big win, and that's why we nickname it the lottery trade. And at the moment it's going to bring in more profit than our trade 1 did, but not as much profit as our trade 2 did. So we'll have to see how price action unfolds to see how that trade plays out. The other open trade that we have in the market at the moment is in the British pound to US dollar. So let's take a look at that. The British pound to US dollar has been a very good instrument to trade recently, using the FLD Trading Strategy. As you can see, we've got some very good clear cycle moves, and we've taken some very profitable trades recently. There was, of course, this trading opportunity over here. That was an A category trading opportunity. That was in the middle of March as price bounced out of this very prominent trough over here. Now that trough was of at least 18-month magnitude. And people have asked me recently in emails why, when the analysis is showing a 54-month cycle trough, as you can see over there, why I'm writing on the chart and speaking about an 18-month cycle trough. The reason for that is because the placement of the 54-month cycle trough doesn't have any impact on our trading for the FLD trading strategy. As you know, we calculate our underlying trend up to the 18-month cycle. We don't include the 54-month cycle. So the actual placement of that 54-month cycle trough is fairly meaningless in terms of our trading using the 20-day FLD. So that's one reason why I speak about a trough of magnitude 18-month. The other reason is because very often the exact placement of that 54-month cycle trough is difficult to determine. Sometimes we have to wait until another 18-month cycle develops before you can say with absolute confidence where that 54-month cycle trough should be. I'm pretty sure at the moment that that 54-month cycle trough did occur back in March, but it's a 4.5-year cycle. There's no reason only a few weeks after the trough has occurred for me to be absolutely convinced that that is where that trough occurred. So that's why I tend to talk about an 18-month cycle trough having occurred in March, possibly a longer trough, possibly 54-month cycle trough. But it was certainly of 18-month magnitude. So the current trade that we're in is, of course, an E category long trade. Okay, which we entered 2 weeks ago, and let's zoom in and we can have a look at a little more detail for that particular trade. There we go. As you know, we entered the trade as a price bounced out of the 40-day cycle trough. There we go. And as price bounced out of that 40-day cycle trough, it of course crossed the 20-day FLD, and we entered that trade at that level, and our T1 target was hit on the bar of entry. I was speaking a moment ago about the average time it takes to reach your T1, your target for your first trade. It very often happens on the bar of entry, and that happened in the case of the British pound to US dollar, at which point we immediately raised the stop loss level, of course, and our T2 target was reached last week. In fact, I spoke about it in last week's video. Our T2 target was somewhere over there, and that was reached last week. So what has happened in the meantime? Well, in fact, very little has happened over the past week. We're making slightly more profit out of our trade 3. We still have an open trade 3 in this trading opportunity. When our T2 target was reached, we of course raised our stop loss to our break-even level, and that was the situation when I recorded last week's video. But we are now implementing the 3-bar trailing stop, and as you can see, that 3-bar trailing stop is at that level over there. And so if price comes down to that level, then we will exit from our trade 3 at that level. As the price action unfolds this week, of course that level will be adjusted according to the 3-bar trailing stop rules. And so if price drops suddenly today, then of course our trade 3 will have made less profit than our trade 2, but more profit than our trade 1, which is very often the situation. If of course price keeps moving up, then our 3-bar trailing stop will move up, and we might very well be in a position where our trade 3 will take more profit from the market than our trade 2. And it might even turn into a lottery trade, in which case we'll take a big win from it. But it's too early to tell exactly what's going to happen with that. Now, an interesting thing has happened in the British pound to US dollar. As you can see, I have in fact pinned this 40-day cycle trough over there. You can see that pin symbol, which indicates that I've pinned it. And the reason for that is because the default analysis that Sentient Trader is performing in the British pound to US dollar has shifted slightly, and it is in fact positioning that 40-day cycle trough slightly earlier. And there's a very interesting reason why that has happened. And it's something that we must bear in mind when we're looking at the trading opportunities that lie ahead of us. So let's start speaking about the trading opportunities ahead of us. What potential trades are we going to be entering next? And seeing as we're speaking about the British pound to US dollar, let's start with taking a look at what's going to happen next in the British pound to US dollar and discuss why the default analysis in the British pound to US dollar has changed. We did also last week make a good and quick profit out of our C category trade in the euro to US dollar. Here is the analysis of the euro to US dollar at the moment. There is the 40-week cycle trough, which for some time we've been identifying as having occurred on the 4th of April. And there was the A category long trade that we made, a good profitable trading opportunity. Here is the B category interaction, a typical interaction where price tracked along the FLD. And as mentioned in last week's video, we were given a brief window of opportunity to get into our C category trade. And our T1 target was taken out at that level over there the day after we entered on Tuesday. Our T2 target was taken out right near the top of the trading on Wednesday of last week, and our trade 3 exited at a break-even level over there. So that's a break-even. So our trade 3 made no money, but we took profits from our trade 1 and our trade 2 at the T1 and T2 targets. And it was a very good example of a C category trade. You've got to be nimble getting in and you've got to be nimble getting out, because very often the target generated by price crossing the FLD is very accurately achieved by price, as you can see. Very, very accurately achieved by price, and then of course the market falls away. The discussion about upcoming trading opportunities and detailed consideration of the analyses that we're tracking in these markets is in the full video, which is available in the Hurst Trading Room. Thank you very much for your interest in Hurst cycles and in the Hurst Trading Room, and I look forward to seeing you next week. If you would like to gain access to the full videos, then please make sure that you go to the URL presented on the screen at the moment, which gives you full details about the Hurst Trading Room. Thank you very much for your time and your interest.